Maruti is going to be out with its numbers well within market hours. So let me take it across to Mitul Shah and find out what he's penciling in terms of what Maruti's performance could be. Mitul, hi, good morning. Great to have you on the show. Help us understand, firstly, operationally, what are you penciling in from Maruti for the quarter gone by?
Yeah, good morning. So Maruti reported really very strong numbers. Of course, last year base was impacted by COVID as well as primarily supply constraint on the semiconductor side. So volume growth came in 36% YOY and even sequentially it is a double-digit growth of around 11%. Moreover, we believe that because of the consistent price increase as well as product mix shaping up, there would be growth in the average realization also roughly in the range of 6% YOY, 2 to 3% improvement on a sequential basis for company.
So that's the word coming in, but the volume data is pretty much factored in, Mitul. The question is, on a realization basis, what are you expecting? Because margins is something that we would want to watch out for the company, because from the 10% plus levels that we used to see in FY21, they had dipped to sub 4%. What are you expecting this time? Will it inch closer to 10% mark?
Well, it may not touch 10% mark, but you are right. Earlier, it used to be more than 10%, but since last 3 years, it has subpar below 10% margin, so more or less in the range of 6 to 8%. But this time, we believe that there would be a sizable improvement on a YOY as well as sequentially. We expect EBITDA margin to be around 9.6%, primarily because of the operating scale as the volume has gone up, and to some extent raw material correction price will also benefit to some extent in this quarter. The entire full impact of lower commodity price will reflect in Q3 numbers, but Q2 will also have at least 1.5 month impact on a positive note. Additionally, very important is yen is in favor, so currency rate roughly in the range of 7 to 8% depreciation over last 6 months compared to INR. So as company is importing some content and paying some royalties, primarily it is a direct as well as indirect import from Japan. So nearly 40 to 50 basis benefit should come from this currency side for the company. Therefore, we expect margin at 9.6%.
When we just talk about two-wheeler, four-wheeler and auto anch, what is your preference now? And how would you essentially look or advise investors to buy, considering that, steel prices are down, various metal prices are down? How would you look at some of these names?
In case of two-wheeler companies, almost all are trading, particularly Bajaj and Hero is trading at attractive valuation. However, domestic side is not improving as per our channel check. There is some improvement, but it is below par. And if we compare pre-COVID levels, still there is a sizable decline in two-wheeler volume on domestic side. At the same time, export is also under pressure since last 3 4 months, particularly African countries where affordability has become slight issue due to global inflation. So two-wheeler space overall, we have buy recommendation because of attractive valuation, but still we believe that it will take some more time to give sizable return to investors. So we prefer Maruti Suzuki over others, and we like few ancillary companies like Bharat Forge, wherein traction coming from domestic CV side as well as non-auto space is also improving for that company.
Mitul, since we have you with us, also talk to us about the entire buzz around this festive sale, because the initial data that has come in does suggest that the festive sales over the Diwali weekend were quite strong. Have you done your channel checks, and what do they suggest?
So for ancillary tire companies, we remain positive for all the companies, particularly C8 and Apollo Tire, wherein there is a improvement on the OEM side in terms of production. As we all know that semiconductor issues slowly getting sorted out. So production level of all the OEMs are increasing every month, and that will continue probably in second half also. At the same time, most of these management has commented during last con call that replacement demand is also improving sizably. So traction coming from OEM as well as replacement and export volume also, because these companies have expanded well in last few years and new products launches happen in European countries. So most of these companies, particularly C8 and Apollo, they are benefiting from higher export with a favorable currency, OEM improvement, and replacement coming back. So we believe that there would be some re-rating would happen as these companies have traded at lower valuation in past 1.5 year. That will again go back to historical higher multiple during the upcycle. So we remain positive on C8 as well as Apollo Tire.
Okay, that's interesting. Mitul, the other thing, of course, is the cost pressures because of the commodity uptick, right? Wanted to understand whether you think players like Maruti will be able to pass it on to consumers without getting much of an impact on volumes or not. Because once again, you are seeing metal prices rebound.
See, commodities already started correcting. Aluminum has corrected in a very big way. Steel prices are down by more than 25% from the peak level. But all these companies have a long-term contract of 3 to 6 months, they are not realizing those benefits. So second half, particularly Q3 onwards, we'll see those benefits. And we believe that there is a strong order book for in case of Maruti, as Mr. Shashank Srivastava indicated, it's the order book of 4,40,000. Strong booking for Grand Vitara 75,000. So in this situation, demand is very high, supply is not matching. We believe that these companies will not pass on the benefit to customer, except few entry level cars where still demand weakness is there. They may pass on to some extent. But overall benefit largely would be retained by these companies going forward, and margin expansion should be there on.
So, word coming in, Mitul. Thank you so much for joining us. We'll let you go on that note, but at least for the day today, the auto companies are gaining momentum. So, Bajaj Auto is up 2.5%, Maruti ahead of its earnings is up 2%, Hero MotoCorp, MRF, Bharat Forge are some of your other names which are moving with decent volumes as well. But it's Reliance actually, which is doing quite well, 2% higher on that one, and giving it company is also ONGC with a gain of 2.25%. We'll